Hello, this is Zachary Hogan, also known as IZXTG on social media. You can find me at zacharyhogan.online. And we are here on Forex Factory. It is Saturday, March the 6th. And this is going to be the weekly market overview for the 7th to the 12th. So let's get right into it. You can see here on Sunday we do have the Euro high impact news with the French presidential election. As of this time right now, the candidacy is between Macron and Le Pen. So we'll have to see, as this will have an influence over the euro, and it's been in a huge bullish uptrend. So we're going to be taking a look at that. On Monday, the only thing that's really significant here is our Australian dollar retail sales. Tuesday, we have the annual budget release on the AUD. Wednesday, May 10th, we have crude oil inventories, followed by the New Zealand dollar official cash rate, which is essentially their interest rates, and they are also going to be making a rate statement and holding a press conference just after 6. We in the evening are going to have Governor Wheeler speaking, and that's really all that's happening Wednesday. If we look at Thursday, we have the British pound manufacturing production in the morning, followed by their inflation report. Their bank is doing a voting, and we are also going to have their official monetary policy coming out. So a lot of volatility is going to be happening on the GBP pairs later on in the week. We also follow that up at 8:30 just before New York with unemployment claims and PPI on the USD. Friday, we do have G7 meetings starting, so just be prepared for that. And we're going to be able to see this influencing the market throughout the entire week leading up to Friday. And of course, we do have our normal Friday morning news on the US dollar with our core CPI or CPI, the retail sales, and core retail sale monthly reports, followed by some consumer sentiment at 10. And all of these times are in Eastern. So we're going to go ahead and we're going to get onto the charts now, and we're going to take a quick look at the US dollar Canadian. If we come onto our daily, just to get a better idea of the bigger picture, I am bullish on the asset overall, and you can see that we came right up into this whole 138 level, the high at 137.935, right into this whole demand zone, and then we had a large rejection of about 150 pips on Friday. It was non-farm payrolls, however, when the news came out, that didn't necessarily have a significant impact. We're going to go ahead, we're going to take these drawings off. Let's take a look at the intraday levels. You can see that price, we did come up. We are currently just below our 200 exponential moving average. I do want to see real quickly what the weekly is looking like. So this candle in particularly is a bearish candle, but I don't necessarily see price doing some huge movement to the downside. If it were to continue with the bearish movement, the first target would be right here at the 13605, and the next one down here at 1355. So 50 pips and 100 pips respectively for the target. However, it would not surprise me to see price come up and trade and fill in some of this wick, perhaps maybe even up to this whole 1337 range, or the 1377 range. So we're going to go ahead, we're going to add a price level in here just so that we can be aware and pay attention. Let's quickly adjust this. Our bullish target. And let's take one quick look at our Renko. So with where price is currently sitting, we are on top of what is now a demand zone. So I would like to see, of course, how price action begins the week, but in the event where we do come down and we trade at this whole 135 2, 1353, even to the 1355 level, it would not surprise me for us to have a lot of demand in here. There is going to be a confluence with this 200 exponential moving average coming up, and of course we do have our daily Fibonacci quite a bit lower, so at this time I would not expect us to go down and tap that 38.2. I would be more inclined to see us continue on up to this 61.8 golden level. So that's really what I'm thinking here on the USD-CAD. Again, if the week begins and we do get a little bit more bearish movement, what could happen could be something like this. Let's just go ahead and edit this up. And we're going to turn off the extension, make it white so it's very easy to see. And we could see something like that just to begin the week, where price continues down and then has a bullish movement right back up into this whole 137 price range. And then at this time, we just have to see what the confluence is looking like and if price is going to continue just slowly trending up towards our bullish target, essentially is what I am feeling. Now, if we're going to go ahead, let's check out the GBPUSD. On this asset, I've been very, very bullish. We did an in-depth analysis with a couple of my students the other week, but with where we are right now, I do feel like the bullish movement is going to continue, especially with what we're going to be looking at with the interest rates coming up later on in the week. However, it would not surprise me to see some bearish movement before we continue with the bullish momentum. Now, we do have a lot of pending sell orders, I would imagine, at this 1.3 level. It's about 20 pips away. Psychologically, it's a very powerful zone. We're trading above the 200 for the very first time in quite a while here on the daily. And if we look at last week, we did have a nice bullish finish to the week with NFP. And if we come down here onto the intraday times, let's just take a look. The NFP candle would be right here. So it wasn't very significant what happened with NFP. If we want to look at this, there was potentially about 25 to 30 pips of movement just on that 1 hour, but given the data and how positive it was for the US dollar, it was not necessarily as expected. And you'll see exactly what I mean by that, because we're going to be taking a look at the dollar index in a couple of moments. But what could we be expecting on the GBPUSD? In all honesty, it wouldn't surprise me to see price come back down even to this whole 128.5 zone once more. If we do go below this whole level, what we could be looking at next as a potential area for buy limits is this whole confluence at the whole 1277 to the 1275 zone. Right in here, it's the whole X marks the spot. So I'm going to go ahead, I'm going to add a price level. And this is where I will personally be looking for buy limits just at the 1275. Pending buy limits. And of course, we have to see how price reacts at this time with the 1.3 psychological level approaching very, very quickly. Now, one thing to notice is that the true trend on this asset is to the upside right now. We've had some just slow and steady movement all throughout Thursday and Friday, just getting closer and closer to this area up here. And of course, we have our whole point of control with the average of all of these days of trading in here from June of 2016 up until about early September. We were seeing a lot of just ranging within where price is now and this whole 135 level. So I would not be surprised to see price make one big movement similar to what happened over here on the 18th to get us up into that whole 132 level. That's more of a midterm target, but again, we just have to see what happens this week. And if we go and if we look on how our Renko chart is looking, you can clearly see that there is a bullish trend happening. So if you want to learn more about what we did with this chart, just feel free to either email me at zachary@startwithtrading.com or just go to zacharyhogan.online, send me a message, message me on Telegram even, and just connect with me so that we can discuss your options and of course the availability. Now let's move forward and we're going to take a look at the Euro US dollar. And as you can see right here, we do have a large gap that hasn't been filled. Our bullish price level of interest, for those of you who remember, was at that whole 1.1 level, which we're basically at. We're about 2.2 pips away. And with where we are right now, what we could be looking at for this next week, especially with the elections, let's start with the weekly candle, of course. You can see here, last week we came down, we gapped, of course, but we came down, we touched the top of this whole zone, and then just continued up. So right here in this area, this is the most relevant and active area of demand that we have going on. So I would imagine that if price were to start trending to the downside and coming towards this zone, we could anticipate a quite a large bullish reaction if we get into this whole area of demand. Now, with this currency pair in particular, I am still looking for more movement to the upside. I'm bullish at this time overall, but given how price ended last week, given the elections happening here on Sunday, and just seeing whatever new information comes into the scene that could affect the euro currencies, it wouldn't surprise me for us to get a little bit of a bearish pullback here, even down to this whole 108 level. So not quite filling the demand gap entirely, but if I were to go ahead and add a price level, we're gonna make it not green, the bearish target, we're gonna put it at a psychological level just for ease, would be at 108. So with the Fibonacci's that we have on here, one of them is a daily one, the 61.8 that's up here, and one of them is more intraday. And with what we are looking at, again, like I was saying, wouldn't surprise me to see a little bit more bullish movement just up beyond that whole 110 level, maybe even up to the 110.02, another 20 to 25 pips to the upside before we get some of that bearish correction. And the first target would be right in here at the 109 level, and then of course our second target down here at the 108 level. So just pay attention to what's happening with the euro pairs. Basically all of the euro pairs, if we're gonna go, we can look at the euro JPY. It does have, and this was an active sell from a while ago, I did get stopped out on that, but you can see all of the euro pairs basically have significant gaps. The euro odd, euro JPY, I believe the euro GBP also has one. So you can see here that it's not just one, or the one euro pair that has it. It's basically everything. And we're gonna go and we're gonna look at the euro future here for a moment, and you can see that there are two gaps within our field of vision, three actually if we want to include this, but this is the most recent gap, obviously, and it's fairly significant when we take a look at it in comparison to this little one right here, this little one right here. Let's just scroll back a little bit, see what other ones we could notice. We have one going on here, one going on here, and And that's really all that I can see right now. I'm not going to highlight them or mark them up or anything. There's one in here as well. But you know, it would be interesting to see and go and back test what this gap right here on March 6th did in the market, what this gap right here on January 2nd did in the market, you know, and just back test and see what these gaps look like in comparison to this larger one. And we haven't seen necessarily a gap like this happen on the euro pair or on the euro future here. So it's just interesting to see, you know, definitely something to pay attention to, and noticing that we did gap above the 200 exponential moving average. So this to me does look like a trend shift. It looks like we are going to continue with the bullish movement. Even seeing price trading right up in here to the 112.5, you know, even up to the 113 level. And I'm talking with the Euro USD, but you know, here on the actual future itself, you can see that we're looking at price at 1.10235, and that's about 20 to 25 pips above the Euro USD. So just keep that in mind. We do have an RSI on here, but we're not really going to talk much about that. And one more quick look at the weekly here. So yeah, I mean, with this, honestly, I am very bullish on euro pairs at this time, just given the information that the chart is telling me. And we can use the same concepts to apply here on the futures market with our examples of areas of demand and areas of supply. You know, it's the same concept when we're looking at this. So everything that we do with our trading style, whether it's the Fibonacci's, whether it's our areas and our zones, whether it's the moving average, whether it is simply just looking for price action patterns, you know, they are universal concepts that we can apply, and that's why we like to keep it simple and effective. If we go, and we're gonna go quickly and just look at the British pound, and again, this is the future, so you can see we're trading just below that 1.3 on the future, and that is very, very close to what's happening on the GBPUSD. So clear uptrend to me. We are trading above the 200 on this as well. And if we were just to go, just so you can clearly see the difference, and put the GBPUSD and the British pound future side by side, let's just load up a clean chart. I want you to notice the similarities. Notice where the patterns are forming. Notice what the candles look like. Notice how price does certain things on the future that are reflected on the GBPUSD. It's a really good indicator when you compare just like this to see which is leading, which asset is leading the movement, and really indicating the potential future for that particular Forex currency pair. And this is universal. This is something, again, that we're going to see regardless. If we go and we'll quickly look back at the Euro currency future, and let's pull up the Euro USD. Take this price level off. But again, just notice, notice what price is doing. Notice the highs, notice the lows, notice the patterns, and realize that, this gap right here, it's basically what we see reflected here on the Euro USD. So it just shows you where the market, whether we're speaking about the dealers, whether we're speaking about retail traders, whether we're speaking about professionals and institutions and hedge funds and governments, it shows you where the inherent value is being placed right now. And let's look at the dollar index, because we did have a gap on the dollar that has not necessarily been filled to its entirety. We did come up on NFP. My initial bias here for the non-farm payrolls was to see some movement to the upside, a spike to the upside on the dollar. And of course, I was looking for it to fill the gap. Now, obviously, that did not happen. And if we go ahead, we just zoom in a little bit more. The NFP candle happened right here. So you can see we did get that initial spike to the upside, just followed by a lot of bearish movement for basically the entire day after that. So my outlook on the dollar as a currency, the US dollar, is definitely still bearish at this time. We do have that 95-cent target down there, and it'll be interesting to see how that translates into the charts. And when we're speaking about currency pairs rather than an individual asset. But of course, we do just have to see what happens at this time. For me right now, this is just clearly looking like we're going to come down, see some trading at this whole 97.8 level. So we'll just have to see. This was back when Trump was winning the election. You can see we bounced perfectly right off that 200 and then just started a nice little uptrend. If we look on the weekly, you can see we did have a bearish week, so it wouldn't surprise me just to see this movement continue and just see us start trading down here to the upper 95 level, and then coming down. By the time we get down to this 95, we should have some nice confluence with our 200 exponential moving average as well. Now, we are going to be making some adjustments here with how we do these videos. Throughout the weeks, I'm going to be looking to introduce a new series where I do analysis on individual currencies. I focus just on that one asset for the video. I'm going to be taking recommendations for what I should be looking at in regards to what analysis you would like to see, what pairs, what commodities, what individual currencies in the futures market, or what stock indices, or even individual stocks themselves. So definitely leave a comment. Let me know what your suggestion would be, and I will look to just analyze the asset accordingly and using the same exact strategy that I use in my own trading. Now, we will take a look at one last asset here. We're going to take a look at gold, and you can see we did have an active buy alert at that whole 1250 level, but keep in mind, this was just an alert. This was a pay attention when price gets to this zone. And you can see clearly here that at the mid-April, after this nice big push up to our whole area of demand here, or of supply rather, we came just a little bit short of the 1300 level. We had a high of 1297.4. So our area of supply, although we did get into it, the overwhelming amount of sell orders that was in here has just pushed price down quite nicely. So given where price is right now, we're resting at a very interesting place. There's a lot of confluence happening from back here in April of 2015, as well as the end of the year 2014. So it wouldn't surprise me to see price have one little more push below, maybe about $8 to $8 to $10 to the downside to the whole 1220, even to the 1218. To 1215 level before we get some more movement to the upside. And if we look at our true price action, you can see here that price is still looking like it has some more downside movement. I wouldn't necessarily see it getting as low as this area of demand that we have on here, but we will just have to see. It's a 1200 level, very powerful psychologically, and given the way that the market closed, you can see where our confluence is coming in. We did have a trading range happening back here in March, near the end of the month, before we started that nice shift in the uptrend. So notice, again, we had a little miniature gap. We hit our peak high, came down, retested it, came down, tested the bottom of our supply zone one more time, gap down over the weekend, and then that just shifted the momentum to the bear side. So let's just see what happens. What I would be looking for personally on this would be for the week to start off with that downwards movement. In the event where we get price moving down to that whole 1220 area, I will be looking for buys on gold at that time. But of course, trading involves risks, so just make educated decisions that are going to allow you to be in control of your investments. And with that, I appreciate you tuning in here. Let me know how this video helped you. Make sure that you subscribe to the channel to get first updates, and like this video. Let me know what your thoughts are, what you're looking at in the markets, and what your plan of action is. My name is Zachary Hogan here at Start With Trading, and I thank you once again and would love to wish you safe and happy trading.